Welcome to another episode of AMD Day Trader. I'm your host, Jamario Walker. Today is November 9th, 2020, and we're looking at our 2-minute chart of AMD. So, AMD had a massive gap down this morning. We went from a point of 85.92 all the way to 84.57 at the open. We eventually fell below all of our moving averages, every one of them. But the thing is, taking a look at the market measures, the landscape of the market, this wasn't a bearish day for the market, as far as the technology stocks or, chip stocks. So I knew that this little negativity was going to be short-lived. I preach, you want to watch your first range, and I'm going to go ahead and write it out. This is our range. And we did break below the range. We broke here briefly and got our confirmation below. That's a massive break below. The reason I didn't take a bearish trade on this is because I kind of figured that this bearish trend was going to be very, very short-lived, and it was. But the reason being, I watch other assets that trade. Let me take this off right quick. I'm going to show you. So let's see here if I can get it to act right. Go. So this is a chip index. This is another chip index. As you can see, neither one of these guys, neither one of them dipped at the open. They maintained their strength. They bounced off that 20 period, and they kept it moving up. On AMD, there were, what we would call some weak holders. People just wanted to get in at a lower price point on AMD. There was a lot of, publicity on AMD last week from analysts, giving it an upgrade, giving it a buy rating. A lot of times when that stuff happens, people take that as a signal to sell, short-term sell, so that they can get it at a lower price point. It's not a bad idea. And that's what happened this morning. It was a lot of sell-off in AMD, but they did that so that they could get in at a lower price point and make a better profit. And go back to my range here. Let me just delete all of this, and we'll start over. So what we got, we had our gap down, massive gap down at the open. We broke out of our ranges, but I didn't take that bear trade because I knew this was going to be short-lived. Also, when a stock goes down like this, your calls are cheaper, because there's less of a chance that the price is going to go up and break out of the profit range for your call. So looking at that, I was able to get some cheap calls. So yeah, we ended up buying the 80-50 calls at 937. So let's see, right here, during the negativity. But I did that because this negativity was short-lived. We're under all the moving averages, which is a bearish state. But this is a short-lived bearish state. So let me go ahead and mark off. We bought in at 937, so somewhere in here. We bought 5 of the 80-50 calls, and we started to sell those guys. Let's see here, from 945 to 1002. So about, let one go here, around here, 945 to 1002. So around here. Get that. Let me erase. So we sold, this range here. It was a pretty big profit for us today. We made 535 total, selling those 5 80-50 call contracts. Pretty big move. Very happy about that. But I preach, you want to check out your ranges and trade according to that range. And you want to do that 90% of the time. On mornings like this morning, where investors and traders are selling, trying to get a lower price point, you probably would have been stopped out on this trade here. But if you got the capital, getting stopped out, it doesn't stop your trading. You can just go in the opposite direction if that trend is strong enough. But me, I waited till this short-lived trend was over and capitalized on the up move by getting those very, very cheap 80-50 calls. We bought them around here, held for this little uptrend here. I should have held a little bit longer, but it's fine. We're still working on, riding that 8-period moving average to maximize the profits. But we'll take our 535 for the day, and we will get ready to trade again. As always, thank you guys for watching, and I will talk to you the next time. Thanks.